All right. Let's talk today why apparently silver investors should not ignore copper. We'll take a look at the copper price. We'll also take a look at the copper to silver ratio as well. And I want to get your thoughts about copper. I have a tiny little coin myself. We might take a look at that if I can find it. And we'll do the usual gold, silver, and platinum price analysis and all that other fun stuff. If you are watching this on the replay, look, just use the time codes below to go to your favorite part. But if you're watching live, you get to enjoy every single thing we do here at Good Morning Stackers with me, Joe Main. But in the first 1 minute of the show, we do what we call here the synchronized slurp. You grab a tasty beverage, I grab a tasty beverage. We slurp it synchronously together. You must do it audibly. We're using the honor system. We've got a bunch of people watching already. This is great. We'll do the shout outs, etc. But synchronized slurp. 3, 2, 1, slurp it. Go. Daddy mug. I'm rocking the daddy mug. My 6-year-old made that just the other day. So I'm going to go with it for now. Who am I? I'm Joe Main. I've worked in the precious metals industry here in Australia for 11 years, been a stacker for longer than that, and I also help you launch and grow on YouTube and other social media. I've done it for multiple businesses, including Bullion Now, Ainslie Bullion, many others, okay? And I have clients all around the world, well, mainly in Australia, but I can help you launch and grow your business or a business that you work for. Does the business you work for, or do you have a business that has social media, but you're not sure if it's doing as good as it could be doing? I'm the person to at least have a chat with and go, I can look over your stuff and go, this is good, but maybe consider doing X, Y, Z. And you never know, you may want to engage my services in some kind of way, whether that's me helping you directly, doing it for you, or it's me teaching you the skills. Teach a man how to fish, he eats forever. So I could teach you the skills of how to do that with my 8 to 10 week course. So just hit me up with an email. Really easy to do. gmstackers@gmail.com, gmstackers@gmail.com. But let's get the shout outs out the way. Loving everyone's work here today. Mark Florida says, GMS, great to see you, bro. Joe Allen, it's been a while, Joe Allen. Hey, Tony, good to hear from you. Hope you're doing well. Oh, well, Tony's here. I knew Tony. See, I knew this would get Tony's interest. CU is the new AG. Copper is the new silver. We're going to talk about copper today. I'm great, Joe. I've been an extended work break. Fantastic. Okay, good on you. So you should. Joe Allen says, GMS to all the family, new highs incoming. Maybe we'll take a look at the gold, silver, and platinum prices today. GMS. And that Joe, I'm great, Joe. You were talking to the other Joe. There's so many Joes here, but Joes are the best. Hazza says GMS with, okay, fair enough. Hey, Hazza, good to see you. Hey, Chat Mum. Yes, Chat Mum is here. Tony Pearson, synchronized slurp. Cuppa, good. Drinking coffee. All right, coffee's pretty good for you. Like and subscribe, stackers. Yes. Hit the like button right now. It helps me with the algorithm, or as I call it, the algorithm. I'm such a dad. Hello, everyone, says Knackers O'Reilly. Now, Tony Pearson says, I'll send you some Silver Shield copper rounds. I love it. With the 1,000 member giveaway Germania Golden Eagle. Yes, so you can show how pretty copper coins are in real life. Now, I actually have one. I just don't have it on me. I think it's in my third-party storage as far as I'm aware. So I do own one of those Silver Shield. I own the Debt and Death, the original Debt and Death Silver Shield copper round that came out when the silver one came out in 2012. So I have one of those. I just don't have access to it right now. But hey, if you want to send me another one, great. And yes, at the 1,000 member subscriber thing, we will do another giveaway. We did a giveaway at 500. Tony was kind enough to provide as a giveaway a silver round, and that went to a lucky member. And when we hit 1,000, and we're about roughly 250 away from hitting 1,000 subscribers, I'll do another one, that Germania Golden Eagle, and a copper round. Ooh, maybe. Fantastic. Let's see, my funky people. Let's go to, I think we've got enough people watching right now. Out of interest, how's the time difference working for people. What I'm noticing here is generally some less people watching at this time, because what's happened is Melbourne has gone into, and some of the states in Australia have gone into daylight savings time. So for some people out there, it's probably a little bit earlier than normal watching the show. So I'm still getting a decent amount, but it's a little bit less, I've noticed. Right there. So how's that working for everyone? Nothing wrong with that. About sleeping in. Good on you, Tony. You should sleep in. All right, people. Let's talk about it. Apparently, if you're a silver investor, you should really be watching copper. Now, we can talk about this in a couple of different ways. We can talk about investing in copper itself, but we're going to look at an article that says if you want to track silver's price movements, you look at a whole bunch of indicators, but watching copper apparently is a really good idea. So we're going to share that article, and I'll read through it as quickly as possible, and then we'll get your opinions as well. I'm just going to fix this lighting right there. Yeah, that's a bit better. So we're going to head over to good old Zero Hedge. I don't think I've watched Zero Hedge. I don't think I've trolled Zero Hedge for a long, long time, actually. The Zero Hedge website. Here we go. Why silver investors should pay close attention to copper. This was out on Monday. Okay, so it's been a couple of days. And this is authored by Jesse Colombo via Substack. I don't know who Jesse Colombo is. If you do, good on you. You can inform me of who the hell Jesse Colombo is. I'm sure they're great at what they do. So we will read this together, and we'll go as quick as possible. For most investors, gold and silver are inseparable, like peanut butter and jelly or two peas in a pod. This mindset leads them to look at gold for signals on silver's future price movements and vice versa. Although silver's price is indeed strongly influenced by gold, few realize the significant role that copper also plays in silver's price movements. In this article, I'll examine how copper prices impact silver and show how bullish trends in copper should help drive silver prices in the coming years. Interesting. To understand the price relationship between two assets, examining their correlations can be highly insightful. Yes, not surprisingly, gold and silver exhibit a strong correlation, 0.771 over the past 5 years and an even higher 0.917 over the past year. So when you get to, just out of interest, when you are examining correlations, when you have a correlation of 1, that means it's exactly correlated, right? So, silly thing, right? If I poke myself with a sharp needle and I feel pain, well, that's going to be directly 1-to-1 correlated because I poked myself with a sharp needle. If I don't have if I have normal pain receptors, right? So 1 is the ultimate correlation, and then the lower you go, the less correlation. So if it's 0.001, then that's a very unlikely, it's no correlation at all, pretty much. So that's a pretty high correlation, strong correlation, 0.771 over the last 5 years, and even higher, 0.917 of gold and silver over the past year. What's particularly striking, however, is the strong correlation between copper and silver, 0.725 over the past 5 years, and an impressive 0.878 over the past year. This strong correlation is a compelling reason for silver investors to monitor copper as closely as they do gold. Let's keep going. The strong price relationship between copper and silver and copper is clearly reflected in long-term charts of the silver to copper ratio, which has remained remarkably consistent over time despite periodic fluctuations around the average of 6. All right, so this is their chart right there. Let's take a quick look at it. So this is apparently silver versus HG1 on the 3-month time frame, silver versus copper. Okay, and it does fluctuate, but you're kind of average. Okay, it fluctuates a lot though. Yeah, the long-term average, okay, equals 6. I can see how that's a long-term average. But gee, there are some times where, you can be playing the copper to silver ratio, just like you could be playing the gold to silver ratio as well. If you want to increase your silver ounces or increase your copper ounces, if you're in both metals, watching the silver to copper ratio might be a good idea. In fact, what I would suggest, watching the copper to silver ratio, and we're going to take a look at that today, might be just as good or, even better. The close relationship between silver and copper can be attributed to factors influencing both supply and demand. From a supply standpoint, silver is seldom mined on its own. Correct. It's usually a byproduct of other things. Instead, it is typically a byproduct of copper, yes, and other metal mining such as lead, zinc, and gold. There are silver-specific mines, but more often than not, it's a byproduct of other metals. On the demand side, both silver and copper have substantial industrial applications. Of course, copper does, yes, driving significant industrial demand for both metals. Agreed. While silver is often grouped with gold, it differs significantly in its demand profile. Okay, the majority of silver demand, 51%, so majority, wow, 51%, technically the majority, comes from industrial use, yep, compared to just 18% from investment. Furthermore, the rapid growth in industrial demand for silver likely explains the rising correlation between silver and copper in recent years. In contrast, gold is largely fueled by investment and jewelry, yep, with much of that jewelry also serving as a form of investment, yes, especially in developing countries like India and China. Agree. This is a quick little chart here. I don't care about that. Go away. This is from the Silver Institute. Okay, so 18% investment, industrial application, yeah, 51%. Okay, so that's just that. Cool. Let's keep reading. This is really interesting. Both copper and silver are far more sensitive to the economic cycle compared to gold. For instance, when a recession looms, both copper and silver prices tend to decline in anticipation of reduced industrial demand. That would make sense. Conversely, when the economic cycle is on an upswing, both copper and silver prices typically rise in anticipation of increased industrial demand. Gold, by contrast, is traditionally viewed as a safe haven asset that investors turn to during times of crisis. Also correct. The strong price relationship between silver and copper is likely amplified by trading algorithms, okay, that predict movements in one metal based on the price of the other. Okay, there are. Great. Often creating a self-fulfilling prophecy. Well, I like this guy. I like this. Jesse Colombo, you're using the self-fulfilling prophecy thing, which I completely agree with. I agree, because what do I always say? And it's obvious, right? It's psychology. Trading is psychology. If people if enough people use a particular indicator, let's just call it Fibonacci, or just trend lines, or just simple lines of support and resistance, and if enough people believe that they work, then they place their trades accordingly, and that actually takes the prices to those places, which then it's a self-fulfilling prophecy. So, for instance, when copper begins to rally, certain algorithms will buy silver, causing both metals to rise in tandem. Okay, although anecdotal, I've often observed, this is Jason, I think it was, or Jacob, I've often observed silver track copper even more closely than gold. Interesting, both on intraday movements and over longer time frames. For instance, I've often seen silver rise with copper while gold stayed flat or declined. Interesting. And at other times, I've observed silver dropping along with copper, even as gold rallied. Really interesting. I'll highlight a recent noteworthy example of this phenomenon using the charts below. As you are probably aware, gold has experienced a remarkable surge over the past year, climbing by $860 US dollars it'll be per ounce, a nearly 50% increase. Let's take a look. Gold rose $860 per ounce for a nearly 50% increase. Okay. Like gold, copper experienced a strong rally in the spring, but it peaked on May the 20th and quickly reversed, wiping out most of its gains. Let's take a look at that. So here's that sharp rally in copper, all right, on the peak of May the 20th, when it hit its all-time high, looks like an all-time high of over $5 US, okay? Unlike gold, which continued to rise. So they're saying gold had this nearly 50% increase over the past year. Okay, so a nearly 50% increase over the past year. But gold had a peak in May and quickly reversed. unlike gold, which continued to rise. Copper bottomed on August the 8th and has rebounded quite a bit since then and is now in a confirmed uptrend once again. Not financial advice there. I don't know exactly. But firstly, we come to silver. Now look at this. This is interesting. Look at the rise in copper, the peak at some point, and then that bottoming there, apparently a bottoming according to this person, and then the rebound. And let's look at gold price. Gold's gone pretty much. And now let's look at silver. Okay. What he's going to make is a sharp rally peaking on May the 20th. Okay, first we come to silver, which, like gold and copper, saw a sharp rally in the spring. Like copper, though, silver peaked. Here we go, on May the 20th and experienced a sharp decline. Yes, it did. Okay, look at that. Peaked on May 20th, experienced a sharp decline. August 8th bottom. A huge correlation, it looks like. Experienced a sharp decline, though not as severe as copper's drop. Okay, while silver and copper suffered throughout the summer, gold steadily continued its ascent. Silver, like copper, bottomed on August the 8th and has been staging an impressive recovery ever since. That looks highly correlated to me. Silver's, I'll get that out of the way. There you go. Silver's price movements are essentially a hybrid of both gold and copper's market trends. To test this theory, I have averaged the price of gold and copper, adjusting copper's price, multiplying by 540 for some reason, to prevent gold's higher price from exerting undue influence. Okay, we're talking into models here. Then I created a chart based on that adjusted average. Sure enough, the resulting chart bears a striking resemblance to silver's price chart. Okay, let's take a look at this. Averaging the price, so he averaged out the price of copper and gold. It results in a synthetic silver price. That's interesting. That tracks the actual price of silver very closely. Oh, that's really interesting. Okay. Okay. Yeah, making a few assumptions here. I don't know why multiplying it by 540. There might be a mathematical reason to do that. But this is really interesting. Moreover, the 5-year correlation with silver stands at a solid 0.842. This is the copper to silver. While the 1-year correlation is as the correlation of that. What's that? While the 1-year correlation even more impressive, 0.956. That's a very high correlation. This is higher than the correlation between gold and silver, and even stronger than the correlation between copper and silver. Okay, so they're talking about this new little silver, the synthetic silver. Okay, so the synthetic silver calculation here, which is an averaging of the gold and copper price, has an even higher correlation to the actual silver price. So that's very interesting. This analysis highlights the importance of monitoring both gold and copper to gain a clearer understanding of silver's price movements. Really interesting. In addition, performing technical analysis on the chart of the copper gold average, or the synthetic silver one right there, seems to be a useful tool, really interesting, for confirming and anticipating silver's price movements. Along with bullish technicals, copper's fundamentals also point to a positive outlook for silver, I imagine. As the world increasingly embraces AI, green technologies such as electric vehicles, solar energy, wind farms, demand for copper is expected to surge due to its essential role in wiring, of course, and other electrical applications, of course. For example, copper demand in the transport sector is expected to rise 11.1 times by 2050 compared to 2022, thanks to electric vehicles that contain over a mile of copper wiring. Additionally, demand for copper to expand the global electricity grid is projected to increase 4.5 times by 2050. By 2030, a copper supply gap nearing 10 million tons is forecasted. Okay, now talking about a French billionaire, commodities trader, recently predicted that copper could soar to $40 per ton. Okay, that's per ton. What is that? $40,000 per ton. Well, what does that work out to per ounce? All of these factors should be bullish for both silver and copper. All right. In conclusion, the overlooked relationship between copper and silver plays a critical role in understanding silver's price movements alongside the more commonly recognized influence of gold. This has been a really interesting article. As copper continues to rebound, both technical and fundamentals factors suggest that silver is poised to benefit as well. With increasing industrial demand, especially in sectors like blah, 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 copper's expected boom is likely to drive silver's prices higher as well. Investors would do well to monitor copper closely, as its future movements may signal the next major leg up in silver's bull market. Wow, very interesting indeed. It says also watch this video presentation about this concept. You can go to the Silver Hedge article and watch that at your leisure, not during this show. What does everyone think of this? I know what Tony's going to say. What does everyone else think? I find this, I love this stuff, man. So thank you to Jesse Colombo via Substack. So Substack, if you don't know, it's kind of like a subscription service. People put out free articles, but then you can subscribe. So go ahead, head over to find this link on Zero Hedge. Head over to Jesse Colombo's Substack. Give him a subscribe, or it might be free. You never know. Very interesting article. I can see the case that he's making for definitely these two right here. And hey, why haven't I seen this before? This is great. Why haven't I been tracking this? I love learning new stuff. Even I've been a silver stacker for 10 years, and I haven't really followed the price of copper against it. I really should have been doing that. So fantastic to see. Yes, I mean, you can see definite big correlations there. That's pretty cool. The peak in copper and the peak in silver, the recent peak in silver as well. August 8th bottom, August 8th bottom. Very interesting. And I find this synthetic silver thing really interesting. The average of copper and gold. So I am going to be following this a lot more. So I'm going to be tracking the price of copper a lot more. We'll take a look at the price of copper as part of our... actually, let's take a look at the price of copper now. Let's do that right now, very quickly. This is copper, okay? So I'm going to do this as part of the copper thing that we're talking about. This is, and we'll take a look at the copper to silver ratio as well. So this is copper in USD, $4.36 US cents. Okay, I'm going to pop on my indicators. This is copper right now. What does it look like to you? I am undecided in terms of its direction it could be going. There's a couple of things I'm seeing here in copper. So first off, of course, clearly you had this high in, so this goes only goes back to 1998. Okay, so we're not going further back. 1998, we had a high of $4.15, and we've done a copper analysis before. I've done this for Tony. And we did this, the high here and this low, and then we created this Fibonacci levels. Very clear for me, Fibonacci levels. Okay, right here we have this, the February 2011, we went out to $4.50, but this really tracks for me. Bang on the 0.236. We've talked about this before, and you can see very clear support levels at the 6.618 here as well. So this high and this low, very clear Fibonacci levels. Okay, very, very clear. To me, you can also see recently that even though we broke out and made new all-time highs, we came back down, we found resistance. We've been in trading ranges in that Fibonacci level as well. We're also finding support so far here. Now, I did say, and I probably do have to stick with it, I did this for Tony not too long ago. I'll pop this in here. I did say, back when I posted this was at the price of $4.15. I did make a call saying higher than this, higher than $4.15 at January 1st, 2025. So I said, at the end of this year, or by the end of this year, copper will be higher than here. So far, it's higher than here. Whether that remains higher than here, I don't know just yet. I would say this is the easiest. Obviously, this is the support level that would need to remain. So let me get rid of that, because you can see that very clearly at $4.15. That's the support level you do not want to break. Okay, I'll stay with my call for now that it'll be higher than this level by the end of 2024. Okay, but we need to also look at the other side of it. What we do notice is we have already been extremely overvalued on the monthly time frame. This was back in May of 2021. Okay, you can see that very clearly right there. And let me move that up so you can see it. We may have found the bottom right there, and we have been tracking up. So this light is really getting in my way. I can hardly see it because I'm getting a reflection. There we go. Now let's see. We have yet to crack back into extremely overvalued on the monthly time frame for copper. But it doesn't mean we will get there anytime soon. You can spend a bit of time in the normal range. Let's see, extremely, like extremely overvalued. Back here, I'll get that out of the way so you can see out of my head. Right there in 2006, a move into it, but you can spend a lot of time in the kind of the normal range without going back into extremely overvalued. Okay, currently it's trending up. It is trending up. Let's have a look. And we're going to take the gold to copper ratio. And I'll show you something very interesting that I looked at just before. But this is trending up. So that's a good sign. Okay, great sign. It looks like, I mean, we obviously definitely broke out of there. So you can see that was a clear breakout. Okay, so look, it is moving upwards. It's just this month in particular, we're having a down month. Just want to hold that $4.15 level. Okay, you start closing any month below that $4.15 level. No, not good. Again, spiking, that's okay. Closing at say $4, that wouldn't be good. Okay, that would be very likely suggesting a lower prices coming. Okay, so far so good. Just watch out that this could always tick over. This could be the dead cat bounce, and that's the relief rally, and then we turn over. Also, bear in mind, and I've forgotten the technical name for this, but we're in a rising wedge, a bearish rising wedge, I think that is called. When you see this right here, when you see this pattern, that's typically a longer term bearish signal. Okay, now it usually takes a little bit longer to get to the apex of it. Okay, so you've probably got a number of, it needs to crack out of here very soon, is what I'm saying. If you start consolidating through here and getting up to here, it looks like the steam would be running out, and then, okay, but so far so good. Rising on the relative strength index above the $4.15 area. Okay, so far so good. So that's why I shall remain higher prices, well, at least above, where are we? Higher than this at Jan 1st, 2025. I'll stick with that. Cool. So keep an eye on copper. I absolutely will be doing in terms of the silver price. Let's take a look. Well, actually, quickly, let's do the blue sky thinking. If we crack out, if copper has a beautiful move, we want to see it break out of this uptrend line. That's obvious. And then what we want to see is it test an area and come back as support. I imagine it could do something like this. Where's my brush tool? If it did this, and I think I've drawn this in before. Actually, I think I have. Give me 1 second. Have I drawn this in before? I want that and I want that. Yeah, I have a few brush strokes here. It can do one of a few things, but that, or it could do that one. That's what I was looking at. Okay, so I'll get rid of that and I'll get rid of that. On the blue sky thinking, this is what you would want to see. You would want to see this move happen like this, where it goes, comes back, tests support. Okay, that's not exact. Test support, and then onwards and upwards. Okay, the next major levels we'd be looking at, I think you wouldn't stop here at the 1.618 at $5.90. You would at least come up to, I think, find $8.80 right there at a Fibonacci level. That might be a little profit-taking area for you. Take some off the table. Hey, imagine buying here at $4.30. I'm not saying buy here, and selling half of it at $8.80. You've more than doubled your profit. You take out your initial investment and then you free ride the rest. That's great. Whether that's doing it in the physical bullion, you've got to take into account premiums then, or you do this on, an EFT or a CFD or whatever, you just buy paper shares. I know, however, a lot of people feel about paper shares, but that's, some people are okay with that. in copper. But you might just be all physical, and that's okay too. The larger movements above that, you'd be looking at, say, $13.50. Okay, but keep those in mind. So that's copper. Now, I really want to show you the copper to silver ratio. And I just popped this in just this morning and had a quick look at it. Here's the copper to silver ratio, and I'm going to get rid of that and do it again. Here's the copper silver ratio on the monthly time frame, of course, right? As this is going up, copper is outperforming silver. As this is going down, silver is outperforming copper. Get it? Got it? Good. If you are, and this might be relevant for Tony, who is in copper and who's looking to get more copper, and this might be relevant for you if you're thinking about getting into copper, but you want to wait for maybe the silver copper ratio to be, really good, so that you might want to swap some of your silver for copper, or you want to wait to buy copper until this is a lot lower. Let's take a look. So I will do this Fibonacci. This goes back to, again, 1998, and I'll pop this in. So again, I'll take it from here and here. So from this high and this low, what I'm looking for here are areas of confluence. Okay, I'm looking for areas where the Fibonacci lines match up with major price movements. Okay, just so you're aware, I will take that off for a second, and we'll just do horizontal lines. Let me get rid of that one, and you can very clearly see it's right there, right? That's at the 0.2 mark. Call it right there. Very, very easy to see, significant area. If you wanted to call it a slightly bit lower, you could match it with there, but no, I like there. That's about right. So that's a very clear area that you would be getting really excited. I'm putting a really in there. Oh, getting really excited above here for copper versus silver. Okay, getting really excited. The area that I would suggest where you'd start looking at, this is kind of the normal range. You'd kind of say for about between here and here is your normal range. So let me pop that in. We'll call that normal range. Normal range. Okay, so here's your normal range, and I could actually, I could extend that all the way through, couldn't I? There's your normal range for the copper to silver ratio. Okay, and these are the outliers. Okay, these are the outlying where it's better to be. Well, this is the outliers where you would have swapped a bunch of silver for copper and then waited till it went back up to the top end of the normal range and then played that. Again, hindsight is 2020, and this is, we're talking over nearly 30 years. Okay, so right, but this definitely looks like the normal range, and these are the outlying ranges. I'm going to remove all of this now. I'm going to show you the Fibonacci, because what I did a little sneaky analysis just before to show you something interesting. So where's the fib? Right there. So here's the fib once again, and we'll move it out. I want to show you something interesting, and I'm going to make a call. And I try not to do calls, but I'm going to make a call on this one, I think. So give me a minute. Here is the Fibonacci. Now, what do we notice here? It's not, for me, particularly lined up. Okay, again, this is a ratio. It's not particularly lined up with any major levels, okay? And this is taking it from this high and this low. Let me say that again. It's taking it from this high and this low, but I don't see any major relation to support levels. There's a little bit there. You could say that's support. You could say that's rough resistance, a little bit of support. Now, this could be it. This could be the bottom for the copper to silver ratio. However, I do want to show you something, and let's take a little look. This might be the right one, okay? I just want to show the other option here. What I'm looking for is a potential bottom in the copper to silver ratio, the absolute probably best area to buy copper versus silver, okay? It might not be copper in its fiat dollar price, but versus silver, okay? or at the perfect time to swap silver for copper, if you indeed wanted to do that. Here's what I'm doing. I'm forward projecting, not forward projecting. I'm going to lower this and keep lowering it until I see this match up with another area, okay? Now, if I go really low, if I go crazy and do this, no. So it can't be this one here, because I would have to lower this so much that you basically it's getting off the chart. Okay, that's pretty no, and it's not even lining up. Okay, so that's too far. Okay, and you can probably already see it, but I'll show you right here. This is what I think could happen, and we did notice this area right here, right? If I line it up with there, let's do that. What do you notice? I notice something very interesting, and it's about there-ish. Can you see it? I can too. Right there. Gee, what do you know? This is, again, forward projecting. That's obviously the top and the bottom, so you don't look at those because that's where I inputted it at. Right here, the 0.786, right there. Okay, that matches up perfectly. That matches up perfectly. This area here, 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 and here. You also have, gee, what do you know? Resistance at the 0.236 right there. I'm going to make a very bold, and support right there, I'm going to make a very bold prediction which could be completely bloody wrong, okay? And if I'm wrong, I'll just absolutely admit it. If the copper to gold ratio is going to go a lot lower, the lowest point that it will get to is right here. This is your low for me in terms of the copper to silver ratio. I'm making that prediction, and I try not to make predictions, but I'm going to put my neck out on this one. This is if we do, and this is way out of the normal range, okay? Bear that in mind. This is way out of the normal range. So I could be, again, completely wrong, but it looks like to me, if Fibonacci is a predictive tool, which I think it can be for predicting bottoms, that is the most likely area for me. But here's what I'll do. If it doesn't get to there, let's draw in the best buy zone. And it's a big range, but we'll draw it in. Classic geometric shapes, I don't want that one. I want you. Here is my best, I'm going to say my best buy zone. I'm going to put it here. And actually, give me a sec. Yeah, right here. Here is your best buy zone for the copper, the copper to silver ratio, right there. Get it? Got it. Best buy or swap zone, right there. And I'm going to say that would be the lowest that it would go. Am I going to say, am I 100% saying it's going to there? No, but it won't. That would be the bottom. You won't see any lower than 0.0605, 0.06. You won't see any lower than that on a close. You could have a little spike, but let's talk closes. So let's say a monthly close. You could spike down, but on a monthly close, you're not going to see any lower than this, okay? It might not get there. It might still trade within that normal range, okay? But this, for me, is the best buy swap zone. I was really tempted then just to put it up to here, anything between the 0.236 and this zero line right here, but I'll just give it a little bit of leeway. Now, you might completely disagree. You might find that this level right here is a good level for you because, it might just bounce. That's, again, within the normal range, and let me show you. Bump, bump, bada, bump. That's not even the normal range. That's the normal range. Okay. I would actually then say, I might even lower that. No, I'll keep that. That's within that range, roughly. Rectangle, rectangle. That one, that one. There's your normal range right there. Okay. So this might be actually right for you, this normal range. What the hell happened there? Where did that go? Don't know why that just disappeared on me. Okay. It's disappearing. Oh, it's disappearing behind the purple. Okay, this might be the area for you, where you would want to get into copper versus silver because you want to up your silver ounces, but you think copper might start outperforming silver over the longer term, and there's certainly periods where it does. For me, I'm not looking at it until we get into the outlying position because it usually goes into the outlying position at some stage. It hasn't been in the outlying position for a decent amount, and that's about the right gap in which it would for me. Anywhere between here, so this is at the, there you go, around the 0.1 mark, and all the way down to the 0.06 mark is the best buy swap zone for copper for silver for me. And I'm going to make this call, man. I'm going to make it because look at this on the monthly time frame. On the relative strength index, we are trending down on the copper to silver ratio. So copper is continuing to underperform silver currently. If silver has a great run and copper, doesn't for a little bit, this has got room to move down, and a lot of room to move down into, it's never been into its extremely undervalued area. But if we just go back to where it previously was, right here, look at that. If it bounces at that support level on the relative strength index, let me show you so you can see it properly. Right there, if it bounces around about there, that's taking it absolutely into at least the best buy swap zone. And I reckon it could potentially take it all the way down to that 0.06 area. And that's my call. No lower than that. And that would be really, really interesting if we found the low there, and that lines perfectly up with the Fibonacci. Cool. So that is copper to silver ratio. I'm going to watch this and I'm going to track it. And I'm also going to track Jesse Colombo's idea about silver tracking with copper. To some of you, this may have been like, yeah, no shit. Like I've known that for ages. But hey, I learn something newer every day. So that is copper and the copper to silver ratio. I think that is the end of our copper talk. Let's do some comments on that. No, I don't want that. That's the wrong thing. Hello. Good to see you again. Let's see. I'd recommend, let's go back. LAM is in the house. Great to see you, LAM. Let's do some comments. Let's do some comments on copper, though, on this article. Let's see. Tony Pearson says, I can afford gold, but choose to buy silver. Let's see. We'll take a look at gold and silver today. Stoked you have jumped on the copper train, Joe, raising awareness. Yeah, I'll jump on the copper train. No problem by me. I am not opposed to looking at anything if the technicals are right and all that sort of stuff. So will be watching it. Tony Pearson, copper rounds were $2.36 per ounce. Oh, and that's including the premium too when I first started buying. Good on you, Tony. That's great. Living Adam Man says the difference is one is purely industrial. Yep, silver is precious and is partly monetary and industrial. They are different metal categories, yes. But when you look at that correlation between the two that Jesse Colombo did, it looks very interesting. Whether it tracks over the longer term, remains to be seen. Make dollars on copper to buy more. Exactly, watching the copper to silver ratio. Physical premiums on copper defeat its desirability to stack. Yeah, the premiums might be quite high. And Tony B says, I'd recommend paper copper foremost. Yeah, if you don't want to buy the physical. Tony says, I buy physical copper rounds as you sell coins. That's correct. I agree with that paper, but what if copper's bull is already topped? That's the risk. Yes, that is. And then we looked at the copper price then. We're over that support level. So long as we remain over there, there's a good chance it's not done. Lots of copper wire needed for solar panels. Yes. Yeah, but lots of copper production supply too. Yes, true. Very true. Same with nickel. Yeah, so it's like 6 of one, half a dozen of the other. I can see the cases for both. Let's get a few more comments. No, we'll come back to those other comments. Someone asked about gold. Oh, Tony says, copper rods can be used to make colloidal copper. I have silver rods for colloidal silver too. Colloidal silver is good to nebulize as well. Yeah. Silver's healing properties, as we all know. Tip of the day, you can buy antique copper coins by sitting with them under your heels. Oh, you can antique copper coins by sitting with them under your heels. Okay. Fair enough. Copper can draw toxins. Oh, okay, there we go. Copper can draw toxins through the feet. Hence why in times past they put copper coins in their shoes. I was not aware. Thank you, Tony. Yes. Crews coming to fix the electricity and the lines have been stripped already. I've said this before, but if you're ever on a train or at a train station and you hear that, and this isn't always the case, but I was told this by a train person. I was told, watch out for this. If you ever hear signal faults, if you hear signal faults particularly at the crossings and all that, it could be just a plain signal fault. It can also be the fact that people have been stealing copper wire out of the stuff. So let's see. And that's a big thing. Copper theft is big, and it'll only get larger when the price goes higher. Ben Ferrugia says, gold new all-time high seems like a weekly occurrence. Speaking of, let's do gold and silver and platinum price analysis. Then we'll get out of here. We'll do a quick one. And then, So let's share the screen. That was as if you only clicked the time code and you missed all the other stuff. We just looked at the copper price and the copper to silver ratio. It was a really interesting look. I would highly suggest you go back and watch it. But this is gold on it's on the monthly. Let's go to the weekly and the daily, because this is a week daily show. Priced in USD 2,660. Okay, looking okay. We're still in peaky territory, and that's really all I need to say for gold. There's not a lot to say, except, as I've been saying, and I'll harp upon it, you've got room to move. You still have room to move. The highest it's ever been on the monthly, let's go back. It's even been higher. I'm just looking here at the relative strength index and going back. It's been really high before. Okay, you can be off the charts with the monthly RSI. Okay, so yeah, it's got room to move. It's easily got room to move first to that $2,875 to $3,000 psychological value before we have a bigger retrace, which we will have. It always happens, right? Monthly, we broke out of a certain area. We will have a retrace at a certain point. As I've been saying, from here, doesn't mean here, from here, it's starting to look peaky, and I will remain with that. So anywhere from here, you've just got to be aware. Could push to there and then have the retrace. I don't know, and you don't know either. But what would give us pause to think that is more likely to happen, that the push to there is going to happen? Staying above the mother of all trend lines. Now, let's look at the daily. The daily is annoying me because if I look on the 4 hour, so here's the 4 hour, right? And we're just above it, okay? But when I look at the daily, we're way above it. So there's something weird going on with the tradingview.com website for me. And on the weekly, it's doing the same thing as well. On the monthly, we're kind of close to it. So we're around the mother of all trend lines right now. Let's assume that the weekly is correct. Apparently, so far, we're above it. So long as we remain above it, okay, cool. So we've had that peak above the mother of all trend lines, which goes all the way back to through 2011 and through 1980. While we're above it, cool. Looking good for a potential pump to that $2,875 to $3,000 level. $2,875 is a key Fibonacci level. I don't have it drawn in right now. I'll show it to you another time. The $3,000 level is the pure psychological value, which I think it would become roughly. Because, we like those even numbers. Oh, gold, when they put it on TV, gold at 3,000, right? Everyone will be talking about it. So we're above there. So look, so far so good. You crack below the mother of all trend lines, and then we'll say it's more likely that we have the retrace from here. That's really all you need to know. We're very high on the relative strength index on the daily, the weekly, and the monthly. We're in peaky territory, but it can go higher. I know, broken record, and I apologize, but that's where we are. So for the new subscribers, watch for no lower, please, than 2,570 or 2,470. That one there, I'd rather see it do I've already done that before. I'd rather see it bounce off there and crack back up. Great positive sign. Don't go any lower than 2470. If it's lower than 2470, I'm going to say the best buy zone is going to be hit. at 22.50 to 21.50. So that's why it's still my upper line in the sand. But so far so good, above the mother of all trend lines, apparently, according to TradingView. Cool. Silver. Another move back above. It is failing, which is a good thing. This failure is a good thing. On the weekly time frame, and we're at $31.48 US cents, $31.50 US. Good sign. We are looking good because that was a big pause. Last week we spiked below 31. As you know, 31 is my final hurdle. We closed it last month above 31, so technically I have to say we are 100% in a bull market, not 99% anymore, because I have to stick with my guns. Monthly time frame, I said, and I've been saying for months and months and months, anytime we close a month above 31, it signals to me 100% in a bull market, higher prices coming, pretty soon. And we closed just above it. I like the fact that we are trending up on the relative strength index, and we're nowhere near extremely overvalued yet. So silver has a lot more room to move up versus gold. Gold's already an extremely overvalued. Silver hasn't hit there yet. Okay, it's got room to move. And we're above 31, and we closed last month above it, 100% in a bull market. I will stick with that. And the other positive sign is, even though we've dipped below 31, we did it on the weekly time frame, and quickly sucked right back up to close last week above 31. Great sign. We're halfway through the week. We have dipped below 31, but so far it's above it. If we keep closing above 31 US dollars on weekly timeframes, great. Okay. The more you close above a major area, the more likely it is not to be taken out and higher prices to come. Get it? Got it. Good. Why is that there? Don't know. We'll get rid of it. So that's good. On the daily time frame, I just want to check that. Yeah, there were a couple of days where we closed below, okay? But the weekly, the higher time frames give you more insight, okay? So that's good. Okay, so far so good for silver. Same as yesterday. We're above 31, remain above 31, and good. For the new subscribers, don't close below $29.80. If you close the week below any week below $29.80, bloop, 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 down to 28, at least the best buy zone. And if you hit 28 again, that comes really into play, 26. And we don't want lower than that. Okay? No, thank you. Not good. But so far, so good. And I'll remain $37 to $40 for 2024 is the highest point that it will get in 2024. I do not see $50 in 2024. I don't see the all-time high, 48 to 50 US dollars in 2024. I don't see that this year. Other people disagree, and they are welcome to. I see between 37 to 40. That's why I've drawn in this range right here. Right smack in the middle is the key Fibonacci level of $38.50 from the very old highs of the 1980s, the very old lows of the 1990s. And I'll remain there as the major resistance point, the next major resistance point whenever that hits. Is it in 2024 or sometime in early 2025 or sometime later? Don't know, but watch out for there. 38.50 is a major resistance level probably, or a little hurdle that we need to get over. That's silver. Let's take a look at the gold to silver ratio. Gold to silver ratio is back within our area. Not a lot to say. Opening red today. Still looking good for me for a move back down. I'm more bullish on this going down, the gold to silver ratio going down, and obviously below here confirms the long-term silver dominance. That's all you really need to know. Looking in silver's favor at the moment. When we're in here, it's the neutral zone. When we're up here, it's gold's looking in favor. When we're in here, silver is looking in favor. You break here, really good. Break here, go time, baby. Right? Break there, absolute confirmation for me. Silver, total dominance over gold over the longer term. And then we'd be talking our lower ratio numbers. We'd be talking about 70 right there, silver's final trapdoor, and then the major 50 level right there, which I would be considering swapping a bunch of my silver for gold at that point, and then free riding the rest and seeing where it goes. Yeah, that's the gold to silver ratio. Yeah, and it's red again on the monthly. So far, so good. That's gold silver ratio, and finally, me old mate platinum. And then we'll get out of here. So far, so good for platinum. We are above. We're still above the 2008 trend line, hovering there. Same as yesterday. That's all I'll say. Watch out for this potential left shoulder, head, right shoulder. It's still in play at the moment. It hasn't been validated or invalidated. So the potential head and shoulders pattern is still in play. It needs to crack back above here. So it needs to crack back. And I did say, I'm going to say there. I'm going to lower that. It needs to crack back above and close above 1,005 US dollars right there. That will invalidate that left shoulder. So it'll invalidate the head and shoulders pattern, which then would say if this is invalidated, it's going to crack up. Like very, very likely. If this is invalidated head and shoulders, you move back up to here, mate, that is very likely to be taken out and go from my cautiously excited zone to my excited zone. And then that would also set up a brilliant move to head up to my final hurdle of 1,115. Crack above there, close any month above it, full bull, and then we'll talk about the higher prices coming after that. We're nowhere near there yet. Watch out for the head and shoulders. My 3 kind of levels that it would probably hit. One of those. That is it. Platinum. Cautiously excited. And that's all I've got to say. We can't do a chart request today. I have no time. We have to get out of here. Final comments, and then we'll move on. Chris is back from the UK. How about sending some to the UK? That's right. Let's see. Oh, it's 11:37 there. Mate, go to bed, bro. We're nearly finished. We're going to finish up in about 4 minutes or so. Happy to post to the UK, says Tony Peterson. So Tony Peterson ships worldwide. Final comments. I'll go down to the very bottom ones. Silver, Chris King says, I am in on silver slightly under 31 US dollars. Good. Really won't know what to do. Really won't know what to do if it breaks out. Well, you celebrate. When price runs up, people will look at it differently. Yeah. I'm going backwards in these, but Pete Repeat says, maybe I should crack out my grandmother's silver. I keep it for special events. Keep it, man. Keep it. Let's see. A little bit more about copper. Yes, silver does have antibacterial properties. I love all these comments. Let's see. Silver all the way and physical. Yeah, look, I just think there's good times if you see something which is highly undervalued towards another asset, and and you can see that they're roughly correlated as well. I tell you right now, if I see that copper to silver ratio get down to my prediction of no lower than that 0.06 level on that chart, I would highly consider myself either swapping a bunch of my silver for copper, because that will change. I don't see it going any lower than there based on that Fibonacci, or I would just buy a bunch of copper and then ride it up and then swap it for silver. Let's see. Tony Peterson predicts $16 silver. All right. Well, if they like your other predictions, mate, I think you're doing really well. GMS, g'day, Pete. Pete, repeat, GMS. So 16 US dollars per copper ounce by mid 2025. Great. I love the positivity. Silver has antibacterial properties, good for the lungs. Yeah, very antibacterial properties. I used to take colloidal silver years back. Hard to find good quality. Right. Blue living atom man. No, not the blue man. Let's see. Copper water vessels are good too. Yes, that's in ancient Rome, etc. They were lined with copper. I might get some sterling silver cups for drinking. That would be cool. I reckon it's a really good idea. Tony P. I imported a large copper standing... Excuse me. I imported a large copper standing water jug from India for its health properties. Great idea. Yes, that's where the origin of wishing wells came from. They put silver coins in the water for purification. Brilliant. Let's see. I think there will be a revival of silverware. I think there will be too. If when the price of silver goes, much, much higher, people will be scouring for it and they'll be searching their grandmothers or their great grandmothers, stuff. I would love more silver and copperware for food utensils. Yeah, I would love. I don't have any myself. I should be getting my kids to. I should be getting my kids to use silver utensils. I think I'll look into that. And Tony Peterson says 2025 for $50 silver. Yeah, I think so too. I don't think it's going to happen this year. Pete, repeat. Maybe I should. Oh, we already did that one. Yes, we did that one. And Chris says, good night, Stackers. Well, if Chris is going to bed and we've been at the 1 hour mark, we're going to end it there because this has been Good Morning, Stackers for Wednesday, the 16th of October, 2024. Thank you very much for watching. Hit the big red subscribe button to join the GMS family. You get a week daily live show. So you'll get it tomorrow, people. What will the topic be? I don't know. The price could go somewhere interesting or something interesting. Or you might want to send me an email with something interesting that you found. If you found an article you'd like me to talk about, any topics, give me some ideas. Subscriber show and tell. Do you have subscriber show and tell? That you want to show some of your stack or something you found in your local coin shop, send me an email. Any reason, gmstackers@gmail.com. Also, if I can help you launch and grow on YouTube. And what I didn't do today is I didn't talk about my brand partners, but they don't. That's okay. We're at the hour point. Of course, head over to Perth Bullion Exchange, perthbullion.com.au. Perth Bullion Exchange, perthbullion.com.au for all your physical bullion needs. They've got their weekly specials. Just go over there and check it out. And of course, head over to wealthstack.com because they do an amazing unallocated gold program with using a phone app. Just go check them out and I'll talk more about them tomorrow. My apologies to my brand partners. But you know what? Sometimes we get too involved talking about the other stuff and that's okay. Once in a while, that's all good. And finally, my people, I'm going to check that my ad is on silent. That has been
Good morning, Stack. Oh yeah, we're feeling fine.
You're welcome, Tony.
Good morning, Stack. It's podcast time.
All right. Grab it.
Grab a tasty beverage. Let's get in the groove.
And let's do the
Synchronized slurp.
in
Now
3,
we're on the
2,
move.
1. Slurp it.
Good morning, Stack.
Oh yeah, great show, everyone. Great energy. Thanks for watching. Stay safe, stay informed. Keep stacking, and I will see you all tomorrow. Have a great one.